Hello again. This is in continuation to our lesson on capital asset pricing model. So this time, I'm going to present to you an example using the formula that I'm going to use for this lesson. So I would assume na nahumanan ninyo og paminaw ang introduction sa capital asset pricing model. So, this time, mag-compute na tawag. Sample application of the methods. So, again, ang capital asset pricing model tries to measure the risk of your investment para makahibaw ka kung mo yield ba o income or profit ang imuhang return sa investment. So, I would also like to mention again nga systematic risk ang risk nga ato ang i-measure sa investment. So, systematic risk meaning to say dili diversifiable nga risk. Dili siya mapugnan, dili pud ma-predict ang level sa ihang risk. So, the formula for COMP is this one. A, which symbolizes expected return on security, just follow the cursor, is represented as RA, and then risk-free rate is represented as capital R, small r, and F. Then RM is expected return of the market. Then beta, or mura siya B pero di siya B, beta siya, the beta of the security. And then equity market premium is the expected return of market minus the risk-free rate. Unsa maning risk-free rate of return? So theoretically, rate of return of an investment nga zero ang risk. For example, bond. Dili risky ang bond because we know that bond is backed by the government, and we know that government can raise money anytime. So, although risky naagihapon siya somehow gamay nga risk, but they consider it as zero risk compared to stocks and treasury bills and other securities in the market. So, the risk-free rate represents the interest an investor would expect from an absolutely risk-free investment over a specified period of time. On CI, risk-free rate, or RRF. Beta, the beta is the only relevant measure of stocks risk. So, beta, mao na siya ang gamiton para ma-measure ang risk sa stocks. It measures the stock's relative volatility. So, it shows kung how much the price of a particular stock jumps up and down kumpara sa pila ang pagsaka ug ang pagnaog sa presyo sa stocks. How much unsa it measures stocks, it measures the price of beta measures kung pila gyud ang particular price of the stocks, pila ang particular price sa pagsaka ug ang pag-ubos sa stocks. Then if ang share price sa stocks move siya exactly in line with the market, then the stock beta is 1. a stock beta of 1.5 would rise by 15%. If the market rose by 10% and fall by 15%, a stock with a beta of 1.5 would rise by 15%. Kung musaka pud ang market price of 10%. Nya, kung mo fall ang market price to 15%, kung if ang stock beta, a stock with a beta of 1.5 would rise by 15% kung ang market price musaka og 10%. Nya, kung mo fall ang stock beta og 15%, mo ubos pod ang market price by 10%. So, baliktad ra siya. If 15% ang pagsaka sa market price, then lower down ang beta to 10%. Unya, kung mo fall og 15% ang market price, beta would fell by 10%. So, there's an example. For example, you have $50. Let's just use this as an example, dollar. You have a stock worth of $50 per share today. Ang annual dividend na ihatag